Hi, Joel. Yeah. Welcome to Property Vibe. Yeah.
Hi, Josephine. Yeah, thanks for having me.
Yeah. Thanks. So, thanks for coming to this session with us. And I know that you have a lot of clients and also friends that are fresh graduates and also young working class. So, probably you can share with us what are the goals and concerns they usually have. Yeah.
So for young adults, those that are around my age, they have actually different needs from other age groups. So many of them have just graduated and joined the workforce. So for most of them, they actually have a empty portfolio. They don't do any insurance or investment. So they do not know where to start. So also many of them are looking to housing, getting married. Um, they also look to pay off their tuition loans that they have incurred from studying in universities or polys. Some of them have traveled overseas also, so they incur quite a lot of large amount of tuition loans lah. So they are looking at how to set aside their income regularly to reach their financial goals lah, which each of their financial goals may be different from each other.
Okay.
Yeah.
So,
So
mm,
with the rising cost of living also, many of them are is a new term. Those that have to take care of their future children plus take care of their aging parents at the same time. So this is an increasing concern, which also changes the planning process for them.
okay. So basically now is that since now this pandemic, right? A lot of people also very concerned about what were their livelihood in the future. So I mean, it's good that to start early. So basically, I mean, for yourself, how would you think that financial planning and all this thing can helps you in a way during this like any crisis that we're going to face in the future? How does it can prove, able to ensure for long term security for that?
I think the key point in financial planning is actually on proper budgeting. So especially during a crisis like this, it's important to have a rainy day fund in case of any emergencies that occur. So managing your expenses through a finance tracker is very important so that you can set aside a sum of money into your savings and investments. So other than that, a common rule that is often used for income allocation is the 50-30-20 rule. So this is by CPF board. So where actually you can use 50% of your income is allocated to your financial needs and 30% goes into your financial wants, things that you want to buy, to spend, to shop. While 20% of it will go into your savings. So this can go into any form, can be insurance, can be investments, can be just saving into your bank account. So it's also important that you review your portfolio regularly so that you ensure that there's no shortfalls or gaps in the portfolio. So you can reach out to your consultant to do a policy summary for you, or even reach out to me. I'll be willing to help. Yep.
So what actually inspired you to become a financial advisor? Maybe you want to share with us? Yeah.
So I first joined financial advisory when I was in university. So I wanted to be financially independent. Then at that point of time, my family were tight on finances. My dad had a medical condition which severely affected the nerves in his eyes. So he started to lose his vision, which made our family situation bleaker and more unstable. So as the eldest child with two younger sisters, both of them are still schooling. So I decided to embark on this path to actually help support my family financially. At the same time, when I discovered that my dad had this medical condition, so I went to check on his coverage, his critical illness coverage, as well as his life insurance coverage. Upon dismay, I found out that actually he did not get himself covered. So actually he was negligent of it. So actually when I attempted to try to find out whether I still can get him protected after his medical condition, I realized that it's already too late. The insurance companies will not accept or protect him on this basis. There'll be an exclusion. So that was when I actually understood the true importance of having a proper insurance portfolio to have proper income protection, especially for the entire family. Yep. And other than that, I like many aspects of this job. I have always enjoyed being in the service line. So being in financial services is very refreshing. So other than that, I also enjoy meeting new people, networking. So this is a job that I find that is very suitable for me.
Okay. Yeah, because I think most of us is actually we think that we will never have like a major pandemic like a virus thing to outbreak, that kind of thing to happen to
Yes,
us. So I
it's
think
very
we always
sudden.
think that this thing won't happen, like we will not be encounter this. But because of this, I think it's really important to have a priority to look into in terms of our well-being first, then our security in terms of our finance. So I think for yourself as a financial advisor, you know all these factors as also you experience in your own life, your dad. So for me also, I tend to take this, for granted, because I thought that, nothing like things like terrible things will happen, but you never know. All these like whatever we are having here is unexpected, and it affect
Yes,
everyone in our lives. Yeah, everybody in our lives. Yeah,
yes.
in terms of jobs and also our well-being. Yeah. So okay. Now we will let Joel to actually share how he can help us to understand, about more of a way like how we can foresee to be more protected in through his presentation.
Okay, so today I'll be talking about the goals and concerns of fresh graduates. So firstly, what goals do they have? So firstly, they want to land an ideal job, of course, pay off the study loan. They might consider getting their first car. A lot of graduates like me, we like to go for vacations. We like to travel a lot. So other than that, concerns could be the engagement and wedding banquet. It could be our first property, which is usually a BTO of a HDB flat. So many of us have a lot of aspirations. So we might consider starting a side business. Many want to further their studies, take a PhD, take a master's. So other than that, many are thinking on how can I save and how can I invest to reach all my financial goals. So for instance, these are goals of someone that is a 25-year-old single, working for a few months. Parents are almost retiring, but he himself is not attached yet. So your typical fresh grad actually gets a average starting income of 3.5K. This can vary based on the course, the university, the job. But net after CPF contribution is 2.8K. So they have a take home of 2.8K lah. So okay, what is a typical fresh grad monthly expenses? I took a I took a rough estimate. For instance, for food, let's say a fresh grad decided to spend 35 per day on food. It can cost 770. So there's also entertainment, which can consist of your weekend dining, cafes, Netflix subscriptions, gym subscriptions, entertainment. It can add up to quite a lot. Even transportation, you take a look at the concession rates, can be for bus and MRT together, it can be 128 a month really. And if you take Grab or taxi rides, assuming each ride is $20, you take about 10 rides, it's already $200 for 1 month. So other than that, there's shopping as well. So especially now is online shopping, it's very easy to spend money. So your total monthly expenses can be up to about 2K a month. So from your 2.8K minus your 2K, you actually only save about 796 a month. So your potential savings per year is only 9.5K. Okay, so a lot of fresh grads like me, we have an idea of saving the first 100,000. How do we save this first 100,000? So assuming from the previous example, if you can set aside $800 per month untouched, it will take you 10.47 years, which will hit roughly about 35 and a half years old. However, this is assuming it's untouched. But what can happen between these 10 years? So there's a lot of happy temptations that cause us to spend money. So it can be wonderful vacations, traveling the world. Each trip can cost you 1 to 3K per person. And there's also lifestyle needs. So nowadays there's a lot of gym membership, there's a lot of fitness membership, dance classes, cycling classes. These can cost you a few hundred a month. There's also spas and treatments that can be a regular basis of 600 to 200 per visit. So pet lovers, there are many people who enjoy keeping pets. So pets can actually incur quite high monthly costs and unexpected spending at times. For example, when your fur friend is actually sick or injured. Okay, other things that can happen is possible happenings, which is getting married, BTO, starting a family, getting a car. So all of this can cost quite a lot of money. Even getting married is already 10 to 20K, varying depending on the type of marriage. So for BTO and HDB, the down payment using CPF may be easy, but it's the renovations, furnishings, mortgage, and the ongoing maintenance that can leave a heavy financial commitment. So starting a family is also not easy. So upfront, it can be up to 15K. You have daily monthly expenses of a child. You have preschool needs. Even a down payment for a car, you have to take out 40% of the down payment. Monthly installments can cost up to 1,000 a month. Then including your petrol and parking, it can be 1.5 to 2K per month. So all of this there's also many unwanted happenings like our parents falling ill, our parents forced to retire, especially during this pandemic crisis. There's a lot of retrenchment or change in jobs, mid-careers job switches. So all of this can cause financial strains. So illness is something that also strikes at the wrong time. It does not discriminate. It can strike at any point of time. So these are all concerns for us. So there are two major items in life these days. So the first is a BTO HDB 4-room, assuming a valuation of 350K based on a 50% contribution between both spouses, and initial down payment plus 25-year mortgage servicing can lead up to 231K spent already. So
So
when
I
you
think
pay off the
just to correct, the maintenance actually is less than 300 for HDB.
yeah.
So it's about
It's
maybe we put
probably
it
less
at
than
80
300.
or $100 lah. Yeah.
Okay, yeah. Okay, so the whole HDB paid off would be roughly about 460K lah. All of these are actually estimates. Okay, so it can be quite a huge cost, 460K in total for just a 4-room HDB flat. So another thing is raising a child to university. Nobody actually put a cost or calculate the figures behind it. But a rough estimate is that a total potential cost per child can be about 350K from the time he's born till university. That's close to a 4-room HDB flat lah. Assuming a 50% contribution is also 170K on your side to raise a child. Okay, so how can you continue to save this 100K that fresh graduates have set aside to? So if you want to do it for 5 years with 8% projected internal rate of return, that's about $17,000 of savings per year. So at 8%, you achieve it within 7.88 years. But let's say you decide to put in a savings bank account, which only gives you 0.05%. You need 10.39 years. So this is the difference. You can save up to 2+ years. This is the difference with interest rate. And that 2 or 3 years can be very important and helpful for you. Okay, so many people ask what are the various instruments out there in the market. So there are many different financial instruments. First would be cryptocurrency, but this is high effort, high return, as well as high risk, very, very high risk. So there are stocks, exchange traded funds, unit trusts. There are safer options that are bonds, endowments, as well as just putting your savings account. But of course, this does not fight against inflation, so it causes negative return. But there's zero risk at all. Okay, so other than that, that is all I have to share. So actually, if you have learned all of this part of your life journey, what would you do differently from now going forward?
Okay. All right.
Planning is bringing the future into present so you can do something about it now. So you can see that Singapore is the background is actually Singapore. So Singapore is a beautiful country if you take the time to go and look at it. So but this was not done overnight lah. It was done over years of planning, years of urban planning, which is the same as your portfolio. You need years of planning before you can build up to something beautiful lah. So as a financial advisor, I don't just manage money, I manage relationships with people. I'm the quarterback of my client's financial team. So with that, I've come to the end. Yeah. Thank you, Josephine.
Yeah, thanks, Joel, for this presentation. So basically, I mean, now we at least know that what are the expenses and what are the unforeseen situation that will have, you know, like planning whether to get married and having buying a property, that kind of thing. So all these expenses that we do not know, actually from here you can see how much that we need to come out. So it's good that you know that all these are the things that you need to plan, not just like you know, like you just plan to like to buy this thing and you know you just buy it, but you never calculate that all this adds up to some amount if you never do your budgeting, all this thing. So okay,
Yes.
now we shall go to the Q&A session. Okay, later on you guys have any question that you have for Joel, yeah, do ask him. All right. So thank you, Joel. Now for the thank you for this sharing. All right. Okay.